What's up, guys? It's Dan from Coin Bureau Trading. Today I'm going to explain to you why the next altcoin season is going to be the biggest one yet, and why everyone who's saying that altcoins will never pump are probably wrong. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I actually want to start out with something a little bit different here. This is a post that I did in the Coin Bureau Club Discord in the research feed a few weeks back, and basically explaining at a very high level, very simple level, why the next altcoin season will be the biggest one ever. And it's super straightforward, guys. And I'll just read through each of the bullet points here. And if you disagree with any of them, feel free to let me know in the comments. But as far as I know, all of these things are objectively true. We have a pro-crypto president who launched his own meme coin and is launching his own DeFi protocol. We have a pro-crypto White House with executive orders around strategic Bitcoin and altcoin reserves. We have a pro-crypto Federal Reserve, which is dropping restrictions around banks interacting with crypto, including altcoins, right? Allowing them to custody. We have a pro-crypto OCC, which is literally allowing banks to run validator nodes on crypto chains. And what are validators on, right? Altcoins. I don't think we're going to see banks doing crypto mining, but we could see them running nodes on like validator nodes on altcoin chains. We have a pro-crypto Treasury Department, which is removing sanctions. They remove the sanctions from Tornado Cash and basically opening the door to developers not having to worry about getting in trouble if some bad actors are using their platform, right? We have a pro-crypto SEC with lawsuits being dropped, regulations being relaxed primarily around altcoins, obviously, and of course with the spot ETFs are also in progress. We have a pro-crypto Congress, like a literal supermajority in the House and the Senate, allowing for quick altcoin related regulations. There's literally, I think, like a 60 or 65% majority in the House and Senate. And so, passing these regulations, even the stable coins, I know there's been a little bit of a hiccup there, but that shouldn't be any issue. I don't think it's already kind of moving ahead. We have pro-crypto asset managers offering altcoins to clients. Fidelity literally offered Litecoin to people like to add in their pensions. We have pro-crypto asset managers tokenizing real world assets on altcoin chains. BlackRock is tokenizing stuff on Ethereum. We have pro-crypto banks planning on launching stablecoins on altcoin chains once regulations allow for it. JP Morgan is apparently going to be launching its JPM coin on Ethereum once that becomes possible. We have pro-crypto payment processors integrating stablecoins like Visa, MasterCard, and PayPal using high-performance chains like Solana for stablecoin payments. We have pro-crypto Web2 companies integrating altcoins like Sony, this big company, launching a literal layer 2 on Ethereum. Everyone kind of missed that news. Pro-crypto infrastructure companies integrating altcoins, which is like T-Mobile integrating Helium for these low-cost mobile plans. And we have pro-crypto publicly traded companies accumulating altcoins, like Sol Strategies raising $500 million to buy Sol. And I think that DeFi Development Corp, I think is the name of the company, is raising $1 billion to buy Solana. We're seeing some publicly traded companies accumulate Ethereum as well. I think some of them are accumulating XRP. Some of them are even accumulating Doge. So, with all these facts, I'm supposed to think that the next altcoin season will be smaller than the previous ones. Why? Because prices have been down over the last few months due to tariffs and the macro being bearish, because new retail investors haven't arrived yet when this is normal and consistent with previous cycles. No, I think it'll be bigger and better than ever. And again, this post comes from the Coin Bureau Club, which you can find down in the description. We do like altcoin reviews there every single week based on the altcoins that our members vote on. And again, research feed where I'm kind of sharing these insights. Team portfolio where we showcase which cryptos we hold, exclusive deals like where you can get discounts on crypto analytics platforms and stuff like that, and of course a members Discord where you can discuss and, let's say, critique or support these kinds of takes that I'm making. But of course, I'm sure that there's going to be a lot of people already in the comments saying it's not possible for altcoins to pump unless there's QE. It's not possible for altcoins to pump because of XYZ. So I'm going to go through now very quickly through every single one of these kind of, let's say, myths and basically debunk, favorite word, I guess, of the day, debunk all these rumors, let's say, all these myths about why altcoins aren't pumping. And we'll start with QE. So of course, the first one, QE, quantitative easing, is where basically the Federal Reserve buys U.S. government debt. The assumption is that altcoins cannot rally without QE, that the Federal Reserve needs to be buying U.S. government debt for it to happen. But this is technically not true, because we saw back in 2017 that the Fed was actually doing QT around that time as well, similarly to how it's doing now. Right now, the Fed's QT has slowed down. It's still running off its balance sheet a little bit, I think by like $5 billion a month or something. But this rate of QT is basically the same as what it was in 2017, and altcoins had absolutely no problems rallying in 2017. So based on that fact alone, of course, everyone is always focused on the previous cycle. cycle, and they say, oh, well, there was QE before, so that must be the reason why altcoins pump so much, and there's no way we can see an altcoin pump again. But as we can see, guys, in 2017, there was actually QT the same way there is now, and altcoins had no problems pumping. So we can say that this is debunked. Again, if you disagree, feel free to let me know in the comments. But again, this is just one of many factors. Second one, we cannot see an altcoin rally unless interest rates come down. Again, this is also not true. We could see that interest rates were actually rising. Like right now, the interest rates are falling. Interest rates were actually rising back in 2017, and altcoins had no problems rallying into that interest rate rise, which again is proof that we don't need interest rates to come down. We don't need QE for altcoins to rally, because in the past they were able to go parabolic with no issues, even with those macro headwinds, let's say. And so, okay, we can say, okay, well, what about the global liquidity? As we can see here, thanks to Bitcoin Magazine Pro, we can see the basically global M2. That global M2 continues rising. I'm sure a lot of you guys have seen charts like this on social media as well, which is pretty clear that the money supply continues to rise. So again, like this is a fundamentally bullish tailwind for altcoins, and you could make the case that this is exactly why altcoins rallied so much in 2017, is that even though interest rates were rising and the Fed was doing QT, global liquidity was still rising. So that was kind of the thing that carried crypto higher, and we're basically seeing the exact same thing happen now. So of course, the next thing I'm sure that you guys are going to say is like, well, retail doesn't have any money. They have no money to invest. The economy is hard. Inflation is high. All these things are true. But then why that? But then why? I do ask, and let me know in the comments. Why are retail investors buying stocks at the largest level in 10 years over the last month or so, over the last 6 weeks, let's say? When that tariff FUD happened, retail investors piled in. There was like billions and billions. I think in a single day, $5 or $10 billion worth of money injected into stocks from retail investors. So the idea that retail has no money to invest, I think is clearly BS. Again, feel free to disagree in the comments. I'm just going through the facts here. Again, this is stuff that you're not hearing, I guess, on channels where they're kind of trashing altcoins constantly. So again, retail investors clearly have no issues with money. They're able to buy the dip like crazy, literally at record levels in the last few weeks here. And as a fun fact, guys, this recent rally we've seen in stocks has been primarily driven by retail. Some would say that's kind of like a bad sign. Let's set that aside for now. Most institutions like hedge funds and all these guys are still on the sidelines. They're still scared. They still think it's a bear market rally. So literally the huge rally we've seen over the last month or so, or last couple of weeks, has been all driven by retail buying. So if they can do that to stocks, why can't they do it to crypto, right? Especially to altcoins. And we're seeing it now, of course, with Bitcoin. Of course, I'm sure the next thing you guys will say, well, no, it's different because during the pandemic, all these stimulus checks were going out, and retail investors were using those stimmies to invest in crypto, and that's why crypto pumped so much. That's also not true. If you actually go back and look at how these stimulus checks were spent, it actually depends on which stimulus check we're talking about, but most of the Stimmy checks, as you can see, only 19% spent their $1,400 Stimmy checks. Most paid off their debts or saved the funds. And this is something that you see universally, that most people who got the Stimmy checks, like, it's easy to forget, guys, and this is one thing to kind of wrap your head around. When people say that, like, the pandemic was somehow objectively superior, or like the pandemic was somehow the peak and the best time for altcoins, it was literally a pandemic where a bunch of people were dying. People lost their jobs. People were not able to go outside. People didn't know if there was going to be another, like variant that comes around and like kills the whole planet, right? Like the level of uncertainty was objectively higher than it is today. Like I would firmly make the argument that the backdrop, both in terms of macro and everything, was exponentially worse, because when people would get free money, they weren't thinking, wow, I'm going to YOLO this in. They're thinking, wow, I'm going to set this aside because maybe I'll lose my job next month, especially when you guys consider how they were doing like the lockdowns, then opening things up again. That, in my opinion, that's like 10 times worse than any kind of tariff stuff, right? Because the tariffs can be negotiated. It's something that can be put on and taken off, right? But the pandemic, that was something that came, infamously from on high, right? Like from the I'm not going to say the name of the organization, I'm sure you guys know, but not to get too much down the rabbit hole there, but the point being is that objectively speaking, the pandemic was not the ideal backdrop for crypto to rally. I will firmly make that case. I will die on that hill. And of course, that begs the question. I guess the next thing that I'll say, of course, so again, retail clearly has lots of money. Clearly, retail does not need to have Stimmy checks for the crypto market to pump, because they weren't really investing that into crypto. As a fun fact, the Federal Reserve's own research found that only like 0.03, I think, percent of all stimulus money went into crypto exchanges based on their analysis. So, again, that's just not an argument. You're telling me like 10 or 20 million, or maybe let's say, I don't know, a couple hundred million max, compared to the tens of billions that retail have been piling in. I don't think that's that's going to move the needle here. I don't think that's the factor. That's the reason why altcoins have struggled. I'll explain why that is in just a bit. But of course, first I need to debunk another myth, and that's that, oh, like all the retail investors are already here, which is, of course, I'm sure some people will say, well, what this proves is that retail investors are already here, and that means that, they're not buying altcoins and whatever. Regarding that, I strongly suggest you guys check out a video on the main channel called Where is Retail? Altcoins Could Be in Trouble. Unfortunately, it didn't get too many views, which is a damn shame, because this video actually breaks down and basically explains how the number of retail investors in crypto, we basically did a super deep dive. I actually did the research for that video. We did a super deep dive into retail investors in crypto, and we basically found that the number of retail investors could still triple, to basically match the level of stocks, because in Europe and in North America, most retail, like 60%, I think, of retail investors hold stocks, but only 19% hold crypto. And that was based on like a bunch of different averages and whatever, which means that theoretically, the number of retail investors in crypto could theoretically triple, especially when we have like these spot altcoin ETFs, spot Bitcoin ETFs, that makes it just as accessible as buying a stock, right? So again, the idea, and especially when you have all this like these potential catalysts around, like, presidents making these announcements and whatever, and all these regulations, that's something that can also help. And the last thing that I'll mention here, guys, before I forget, because I'm sure it's another thing I'm sure we're going to get in the comments, is that part of the reason why altcoins have struggled is because of altcoin dilution, which is another myth, that there's so many, there's so many millions of altcoins, and it's causing a dispersion in capital. So even though we're seeing more retail investors come back, even though we're seeing more money invested, it's just resulting in less pumps because this money is being more evenly distributed. This is also objectively false. I actually did a pretty in-depth research feed post about this as well a couple months back. And the thing is, with like coin, especially with CoinMarketCap, it kind of tracks everything with a pulse. CoinGecko is a lot more selective in terms of the altcoins that it tracks. And as you can see, the number of altcoins has only increased, I think, by around like 30 or 40% over the last basically 4 years. And even then, most of these coins that are tracked by CoinGecko, they're not very high quality. Most of these coins are just like meme coins and stuff that's like, that has like very low liquidity. It just happened to get like a CoinGecko quote unquote listing. So again, like the number basically of quality altcoins hasn't increased by that much. Maybe there's a few dozen more, maybe there's even a couple hundred more, but the idea that there's like millions and millions of quality altcoins that people are strategically investing in, I don't think that's the case. So again, like, this is, I would say, also arguably debunked. And even if we assume like the worst case scenario, let's say that the number of let's say of quality altcoins is doubled, again, the number of investors into the crypto market could theoretically triple. So that would still result in a bigger altcoin season, even if we assume, like, all else being equal, and the number of altcoins being basically twice as much than it was in the previous cycle. So that's also a myth. Anyways, so of course that begs the question. So then why have altcoins been underperforming so much, and when will they start to pump? Like, what is the specific factor that's been missing here? And this is going to sound crazy to some of you maybe, but I actually think the answer is it's actually related to the low views on this video. I think the answer, guys, is attention. So shout out to Ben Cowan from Into the Cryptoverse. Someone actually in our Discord actually shared this image with us, which is really awesome. It's one actually that Ben has shared a few times on his X feed as well. So be sure to follow him on X. But as some of you guys might know, Ben has this awesome platform, and one of the indicators he offers is basically looking at all the YouTube views to like the biggest crypto YouTube channels, and we can see that these views are still nowhere close to what they were during the previous cycle. And again, I'm sure that a lot of you guys will say, oh, it's because everyone was watching TikTok instead and whatever. Again, this is technically not true, because if you look at the profile of the average crypto investor, they're typically men that are aged between 25 and 44, median age of 45. Again, it depends on which study you cite. Of course, there's like different, some studies will say it's a little bit older, some will say it's a little bit younger, but what all of them say is that most crypto investors are men who are middle-aged and tend to be pretty well off. Like, I'm talking like six-figure incomes, or like high five-figure, yeah, high five-figure incomes, and so it's basically middle-aged men who are fairly well off. These are not the demographic that spend most of their time on TikTok. TikTok is mostly like Gen, I think, Z, or whatever the Gen is. Basically, just all the younger people are the ones who are on TikTok. If you actually go and look at the preferred social media platforms of like these different age cohorts, YouTube is consistently still, like, it's continued to be the top one over these last few years. Like, TikTok is not among this cohort. TikTok has not not displaced YouTube in any meaningful way, but it has displaced this younger cohort, which again, these are the younger cohort with less money. Those aren't typically the people who are buying into crypto. Again, the people who are typically buying into crypto is middle-aged men, again, median age apparently around 44 with a pretty decent net worth, who are investing into crypto. That is the average demographic of the average crypto investor. So again, this idea that, oh, the reason why these YouTube video views are down is because of TikTok, again, that seems to be a myth. So, I can keep going and I will keep going. So again, my main argument here, though, is that I think the reason why altcoins have struggled so much is simply because there just hasn't been that much attention on crypto. And to be honest, guys, that actually makes a lot of sense if you think about it. We had the election of Donald Trump, which was super, crazy, and I'm sure that attracted a lot of mind share. Then we had all the stuff around the tariffs, which again, I'm sure everyone is focused on that, and everyone's like panicking about a recession and whatever. So it's almost like there's perpetually been like this like really big news in the headlines that has people like distracted, and basically they're just thinking of other things. They're not thinking about crypto. They're not looking into altcoins. And the big argument that I kind of make, and I've made also in the Discord, and I think I've made in other videos here as well, is that the biggest difference between this cycle and the previous cycle is basically the fact that during the pandemic, all that stuff around liquidity, whatever, all of that is basically the same as what we have now. The one thing that is different is the attention. Because so many people were locked down, because so many people, they couldn't go out to restaurants, they couldn't go out to bars, they couldn't do anything. They couldn't like travel or whatever. So they were just stuck at home, and they were basically researching and looking like, well, what can I do at home? Well, one thing I can do is trade, right? I can learn about investing and I can start investing and trading. And what does that tell us? That tells us, again, like it's not a question about money. It's a question about attention, that most people, again, had the time. They had nothing better to do than basically go into Reddit, go into like Wall Street Bets and start going crazy with GameStop, right? So that is the kind of the main difference between this cycle and the previous one. That again, in the previous cycle, more people were able to pay attention to crypto. But again, the thing is that historically speaking, and this is why I have this total crypto market cap here, it's on the weekly. Historically speaking, guys, most of the attention of the crypto market tends to come right at the peak, right at the blow off top. Like if we look at the 2017 cycle, this is, in my view, something that is more resembling a normal cycle. But because so many people got into crypto during the 2021 cycle, they think that this is a normal cycle. They think that we're going to see, like a first leg higher and then a second leg. And people look at what we saw recently here and they think, oh, we saw first leg and second leg. And when we saw this dip down here, they thought this was the first leg, this was the second one, and that it's over, right? I'm sure that you saw that all over social media. But again, if you actually zoom out a little bit more, you'll actually notice that, wait, we're actually more like somewhere here in this late 2020, early 2021 phase of the cycle. And you could almost make the argument that this whole first peak here that happened during the pandemic was because there were so many people stuck at home. Like this whole thing is basically just like GameStop and like a Wall Street Bets and whatever. Like it's kind of like adjacent to that, if that makes any sense. So if it was not for the pandemic, then the cycle that we saw in 2021 would have looked way more like the one in 2017, where basically this first peak wouldn't exist and you would just have a very big run up that could have actually been even bigger than when people were expecting. Of course, a lot of people were expecting Ethereum to go to like 10K, for Bitcoin maybe to go even a little bit higher. And to be honest, like you could almost like just imagine that like this first peak was kind of absorbed into this more parabolic rally, that you actually could have seen a bigger blow off top in that first cycle. But because we kind of had that two peaks because of the attention kind of being drawn forward, then it kind of, some would make the argument that like stunted the cycle, and some would say that the second leg of the cycle was driven by leverage and whatever. Again, like the point being is that in my view, and I think there's a pretty strong case to be made, that the 2021 cycle was the one that was actually abnormal, and that this cycle is technically normal. And again, that's really hard for people to wrap their heads around, because they think, what, like, how can you say the cycle is normal? Is clearly not normal. But again, in 2017, which I would argue is an actual normal cycle, all the gains kind of happened in the last 4 to 5 months of the cycle. That's when all the altcoins went parabolic here during this final phase. And we simply, we are now approaching finally this final phase. Like this final phase is set to start sometime over the summer. Some people think it's going to come into the fall. I personally don't think so, but let's set that aside for now. We are now entering the final phase of the cycle, which again, when we come over to others, same idea. Is like, people, they look at these first two peaks here and they think that, oh, there was two peaks again, so we're going to a bear market. But again, this was the thing that was abnormal. This, like, you know what I mean? And what happened here, I think as a result is, and again, I'm trying to find ways to explain this because it's a little bit tricky. Basically, what I think happened is because these spot Bitcoin ETFs were released in early 2024, what happened is that all the retail investors from this previous cycle, the ones who were kind of still around, they basically started buying altcoins. So we're looking at others, by the way, now. This is the basically total crypto market cap of all the altcoins outside of the top 10, essentially. So the reason why we saw a huge spike in others, like this is the like in the previous cycle, this was abnormal, and in the current cycle, this is the thing that's kind of abnormal. Why did this happen? Why did altcoins pump so much, I guess, like earlier than usual? And the answer is that we had all these retail investors who had learned about crypto during the previous cycle during the pandemic, and they thought that okay, by the end of 2020 or sorry, by the end of 2024, we will see new retail investors to buy my bag. So I'm going to buy now in early 2024, like basically the launch of the Bitcoin ETF kind of like brought attention to crypto a little bit sooner than usual. And again, like it's that whole thing, that whole idea, attention. The spot Bitcoin ETF launch brought attention to crypto. Retail investors who were from the previous cycle who were paying attention back then are like, wait a minute, I know what's coming next. It means that at the end of 2024, we're going to see a big rally, just like we saw at the end of 2020, right? And then that's when all the new retail investors will come and buy my bags. And of course, what happened is we saw this rally in late 2024, especially with Trump getting inaugurated, and a lot of people felt like, wow, like it looks like it's finally coming. New retail investors will arrive. But again, new retail investors did not arrive because, again, historically speaking, they did not arrive that early in the cycle. They only arrive in the final, 3 to 4 month phase, which is still ahead of us. So this is the thing that, a lot of people are kind of misunderstanding. And I do think that, again, similarly to what we saw here, that you can make the argument that this kind of first leg should have been merged into the second one in a normal scenario. It would have looked more like we saw back here in 2017, which again, you can see here, we're on the weekly chart, guys. Like over the course of like literally 2 or 3 months, you see like an exponential growth, like average 10x return in altcoins over the course of 3 or 4 months. And that happened in the final phase of the cycle as everything was going parabolic. Here, it was way more drawn out. It was over the course of like half a year, right? Like 6 or 8 months. This is the thing that was not normal. And the reason why it was so drawn out is because there was more people paying attention. And this actually creates and sorry, I'm like rambling on this because it's very fascinating. This creates a very interesting dynamic because basically what we have now is a lot of retail investors who bought a lot during this phase and who also bought a lot here in early 2024. And of course, some of them also maybe bought in late 2024 as well, expecting prices to go higher. After this kind of like drawdown in altcoins, sorry, let me back up. When new retail investors did not arrive basically at the end of 2024, and that means that all the investors from 2021 and from early 2024, they've all basically been capitulating, and this is part of why altcoins have been going down. Basically, it's people falling into the trap of like expecting something that is technically not accurate, if that makes any sense. Like they're basically pricing in, they're buying way too early, thinking I'm going to buy in early 2024 because I think the market's going to start taking off in late 2024. And with Trump getting elected, it seemed like that would happen. But again, the attention just wasn't there. But this is completely normal. It's completely consistent with previous cycles, specifically with 2017. So what we have now, guys, is paradoxically actually a very good situation because the result is that most retail investors who are currently around, like existing retail investors, most of them have capitulated and they're either all in Bitcoin or they sold most of their altcoins or they're currently trying to get out at like a break even. And the thing is that this turns these existing retail investors or previous retail investors, it turns them from sellers into buyers. Basically, most of the selling from existing retail investors has already happened, and that means that there's only one thing they can do if we do start to see, which I do think we will, that we're going to see a huge blow off top over the summer. Then all the retail investors who were holding since 2021 or holding in early 2024 and sold most of their altcoins, they're going to have to they're basically going to ape back in, and they're going to think, wow, because based on historical cycles, we're going to see a cycle top later this year or early next year, and they're basically going to buy back all the altcoins that they sold. Paradoxically, this is more bullish than the alternative because the alternative would have been that, like if retail, and let's say theoretically, if all the retail investors who were investing in altcoins, if they got what they wanted, what would have happened is that they would have bought, they would have held, new retail investors would have arrived, all this existing retail investors would have started selling, and this would have resulted basically in arguably in like a stunted altcoin season. And some would say, oh, we've seen that already. But again, it's just the data doesn't back that up. We did not see new retail investors arrive in size based on the YouTube video views. This is not indicative of like new retail investors arriving. You can see it's more consistent with all the people that were kind of hanging around during the bear market. It was basically just some of them coming back and showing a little bit more attention in crypto, but new retail investors did not arrive in size at the end of 2024. So the idea that like, oh, we already saw, new retail investors coming and there weren't as many and whatever, this just simply empirically speaking does not seem to add up and does not seem to be accurate. The worst case scenario paradoxically would have been that all the retail investors from 2021 and from early 2024 got what they wanted, because as soon as new retail investors came, they would have been selling, and it would have resulted in a stunted altcoin season. But now we have most existing retail investors that have basically very little altcoin exposure. And at the same time, we're going to have new retail investors coming in. And this means that you're actually going to have more buying pressure than you would have otherwise seen, and you'll have less selling pressure, which sets the stage for a parabolic run that's more similar to what we saw in the previous cycle here. And you could say is going to be more similar to what we saw even here in that second leg higher in 2021. So we're going to see this huge run up, especially because if we start to see altcoins rallying over the summer, all these existing retail investors will say, oh my God, that means it's going to top later this year and early next year. I know I already said that. Sorry that I'm like fumbling and rambling around here. But all these retail investors, they're going to ape in over the summer because they're going to say the higher highs is going to be basically a repeat of what we saw last year. They're all going to ape in over the summer saying, I'm aping in now because I know that it's going to go even higher later this year or early next year. And that process of aping in is going to basically cause the crypto market to top earlier than people expect. So again, it's going to be a similar idea to back here in early 2024, where existing retail investors will pile in like crazy. But the difference is that this time you'll have existing retail investors piling in plus new retail investors, and that'll cause a really massive rally here. And everyone will be like, wow, I can't wait. And a lot of them like will basically refuse to take profits because they'll say, oh, like Raoul Pal and all these other analysts, they're all saying that we're going to see a cycle top later this year or early next year. So I'm going to buy and I'm going to hold and I'm not going to take as many profits because the real gains are coming later. And of course, this will actually create a self-fulfilling prophecy that causes the cycle top. And again, this begs the question, which I'm sure is going to be another one in the comments. All these things that you mentioned, all these things are already known. But again, these things are known, but no one has been paying attention. That's the main thing, is like all these catalysts, like the strategic Bitcoin reserve and all these things, the only people who are aware of that are people who are already in crypto. And again, like this cohort has basically remained relatively stable here. They've been waiting for new retail investors to arrive to buy their altcoins. Those new retail investors haven't arrived yet. And the result is that most existing retail investors have capitulated on their altcoins. You can literally see it in the charts here. And the sentiment around altcoins is basically what it was around Ethereum before it pumped by 50%. And of course, that makes me think that we're probably going to see the same thing for most altcoins. We're going to see huge, maybe 50%. Well, I actually think it's going to be more like 20% in the short term, but we'll see a huge pump here. I mean, it could potentially be 50%. Like you see a massive pump in the short term. Existing retail investors who are offside start thinking, wait a minute, this could actually be real. And wow, the cycle top's going to come later this year. So I'm going to buy as much as I can now. I'm going to buy even more than I did in early 2024. And then new retail investors will come and they will start buying and you'll see a massive blow off top. And again, I do think that others, the total altcoin market cap here will get somewhere to around $1 trillion. And again, once we have more people paying attention, especially with the macro backdrop being a little bit better than what it was, then headlines like these about like stablecoin bills passing and like creating trillions of dollars of US debt demand and like all these mega banks partnering or like launching their own stablecoins on like public chains like Ethereum, all this stuff is going to start to matter a lot more, and it's going to have a more profound impact on the crypto market. And again, sorry for rambling all of that. I hope it made sense. And it's just like, I could literally talk about this for hours. And again, feel free to drop some comments if you disagree. But again, I think that everything here, again, is pretty straightforward. QE is not the reason. Sorry, QT. Like we don't need QE for altcoins to rally. We don't need interest rates to fall for altcoins to rally. It would help, obviously. Global liquidity continues rising just like in previous cycles, so everything looks fine there. Retail investors have no shortage of money. Stimmy checks are not required for crypto to rally because most of the Stimmy checks were not invested into crypto before. And even back then, the macro backdrop around the pandemic was way worse than what it is now. The number of retail investors could still theoretically triple. All the retail investors are still not here. The launch of like spot altcoin ETFs and the spot Bitcoin ETFs makes it easier than ever for retail investors to access altcoins, which will actually, and again, like some people will say, oh, but that means it's only going to be Ethereum and Solana and whatever. But the thing is that there are second order effects there as well. The more that Ethereum, if you watch yesterday's video, you'll know that the more that Ethereum's price pumps, the more that Solana's price pumps, the more that altcoins in Ethereum and Solana's ecosystem will pump. And basically most of others here, most altcoins with economic value exist on Ethereum and Solana. So the more that ETH and Sol pump, the more that you're going to see most altcoins go up. And so again, like these are, again, second order things that aren't super intuitive to people who aren't really paying too much attention. But again, it basically, just so long as like Ethereum and Solana pump, that'll basically be enough for most altcoins to pump. And again, when will we start to see really altcoin, like a broader altcoin season, broader altcoin participation that we haven't seen yet? It'll only start happening once we start seeing more attention to crypto, which again is not coming yet, but I do think it's going to come over the summer. Again, like this has nothing to do with TikTok views or anything. Most crypto investors fall into a cohort that doesn't really use TikTok. And again, the main thing that's missing is just more attention. And with the improving, with the improved macro backdrop, and with some big announcements coming over the summer, lots of catalysts, I do think that, again, just based on historical cycles, we will see another melt up higher in crypto and in altcoins. And of course, right now it's Bitcoin, and everyone is saying, oh, this means for sure that altcoins are dead. It's going to be Bitcoin only, which is why I'm coming out and making this video to say, I don't think that's true. I think we're going to see a massive rally in altcoins, and everyone's going to be caught off sides. They're going to be aping in over the summer, expecting the same 4-year cycle, expecting a cycle top later this year or early next year. And that's going to cause altcoins to top over the summer. And I've been packing my bags this whole way, accumulating heavily during the lows, accumulating a little bit during the highs. So literally for almost a year and a half, I've been preparing for this move, and it looks like it's finally going to come. So fingers crossed that it does. And if it doesn't, that's fine, because I'm 50% Bitcoin, so I have nothing to worry about. Anyways, guys, if you did find all that information helpful, then consider returning the favor by checking out the Coin Bureau deals page. The deal that we're kind of featuring right now is our Binance deal, 20% trading fee discount with up to $600 in bonuses. That's the biggest discount that you can get. It's the biggest deal you can get on Binance. It's available exclusively through the Coin Bureau. Taking advantage of that deal is super simple. Just click that sign up now button. It'll take you to a page that looks like this. Enter your email or phone number. It takes like 2 minutes to sign up. It has every single altcoin you could possibly need. If you can't use Binance for whatever reason, then check out the other exchanges we have on offer, like Arkham, which is available to US users. We do, I believe, have other exchanges that are available to UK users as well. And if you're looking for a place to store your crypto, or trading bots or tax tools or anything, we also have deals on those. So take advantage of those deals using the link down in the description. They're completely free. They help us out, they help you out, and they help out our partners as well. Anyways, guys, if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.